Time now for Options Corner. Joining us to take a deeper look at this chart is Rick Ducat, lead market technician here on Schwab Network. All right, Rick, what trends do you notice in this chart?
Yes, underperforming the S&P 500 by a small amount, but largely underperforming the tech sector. XLK ETF up about 17 versus 32.5% or so. Apple also has the rather dubious distinction here of being the worst performer during the past year of the Mag 7 here. You can see actually coincidentally the Mag 7 is up just about as much as the tech sector, once again far outperforming Apple here. If we were to look at our chart more closely here, we can see that even though it is, perhaps not faring as well as those other members of that much celebrated group there, we can see that our upward sloping channel type shape here in white is still pretty much where price is traveling within here. We took out our old highs near 259 here. We had a bit of resistance that was met here. Then it became support. We had a bull flag, bull pennant type of behavior there. Now we have broken out to the upside and hit those new highs yesterday here. So now that gives us a downside area to consider. 265 is roughly where that gap, the very small gap, opened up here, and that's also where we hit our previous intraday highs as well. So that would be an area to look for to the downside for support. If we were to add some of our other studies here, we can see that this area to the downside lines up with our +2 standard deviation channel. So that could be supportive. To the upside, 285, our +3 standard deviation channel, could be possible resistance here. Notice that RSI, our measure of momentum, still quite high, even though it's common for momentum to trail off when a stock heads into an earnings event. Here we are just on the verge of the overbought area still. So more of a bullish lean, especially considering we hit those new highs as well yesterday as we head into this earnings event. But our volume nodes, this area here, our range-bound area, centered around 255 or so. That would be one area to look forward to the downside. Additionally, down here, our +1 standard deviation channel lines up with our volume node and our 63-day EMA. Those come together around 243, 244, around that general area.
All right, thank you, Rick. Now take us through an example trade. We've got Tom White, co-host of Fast Market and senior options contributor. All right, Tom, so what's the approach you would take for an example trade given the expectations for Apple going into its earnings?
Well, the bar's high on this one going into the results. And one of the key things that I noticed in the anticipated move that the option market's kind of priced in, it's relatively low. Only just about 3.3% move either way, about $9 in the stock post earnings on a one-day move. So implied volatility levels have come down as the stock has rallied to all-time highs prior to this report. And this is all based on the iPhone 17, the preliminary sales that they've got. They were 14% above what they saw from last year in the iPhone 16. So expectations really elevated going into this report. So I looked at a strategy where I don't have to pick the direction, but I think maybe the stock might move more than that one standard deviation plus or minus to the upside or the downside. So I looked at a need a move type strategy where I went out to the October 31st weekly options. So just one day to expiration, really short-term positioning on this one. I'm going to take advantage of that low implied volatility if you think it's going to rally or fall more than that that plus or minus $9 move in the stock. So I looked in the October 31st weekly options. I'm going to buy an out of the money call vertical. I'm going to buy the 280 strike call, sell the 285 strike call. So I need to move to the upside to get above the break even there. And then on the downside, I'm going to buy the 265 put and sell the 260 put. So you're buying a $5 wide call vertical, buying a $5 wide put vertical. And with the expectations, if I pay a $220 debit for it, $220 in risk on this with the potential to make $280. My break evens on this one, I needed to go below $262.80. That's about $9 below where the stock's going to open up. Or I needed to go above $282.20 to the upside, a new all-time high for the stock. Now, when you look at a strategy like this, you don't have to pick the direction, but you've got to be pretty persistent with your trade management on this one. So if it opens up below 262.80, 282.20 on the upside, you want to probably try to sell this right away. But the idea here is I don't have to pick a direction. I just think maybe implied volatility levels are low and you think it's going to either rally strongly or fall from these all-time highs.
All right. Thank you so much for that example trade for Apple. It's got earnings due after the close today.